Hi everyone. Today I'm going to discuss about depreciation, which is the IRS approved method of recovering the cost of your income producing property over time. In today's video you will get complete overview of the topic and how it actually works. Let's get started. Depreciation, recovering the cost of income producing property. Before we start the topic, this video is only for educational purpose, not a tax or legal advice. Today I'm going to discuss depreciation criteria, depreciable versus non-depreciable property, makers, section 179, bonus depreciation, section 168K, real property depreciation, depreciation recapture, cost segregation, missed depreciation fix, and at the end we will discuss summary. Depreciation is the IRS approved method that allows you to recover the cost of your income producing property over time. Depreciation is the annual deduction that allows a taxpayer to recover the cost of tangible property used in a trade or business. Or for income production, the IRS requires capitalization of most long-term assets. Depreciation spreads the deduction over the asset's useful life. To be depreciable, property must be owned by the taxpayer, be used in a business or income production, have a determinable useful life, last more than 1 year, not be accepted property. Let's discuss depreciable versus non-depreciable property. Machinery, equipment, building, vehicle, furniture, qualified improvement property, they are the depreciable property. Land, personal use property, and the inventory, they are non-depreciable property. Makers, modified accelerated cost recovery system. Makers is the default depreciation system under IRC section 168. It determines recovery period, method, and convention. Recovery period. Vehicles, computers, and office equipments, they include in 5-year property. Furniture and fixtures, 7-year property. Qualified improvement property, 15 years property. Residential rentals, 27.5 years property. And non-residential real property, 39 years property. Methods. GDS, General Depreciation System. 200% declining balance for 5-year and 7-year property. 150% declining balance for 15 years property. Straight line is for real property. ADS, Alternative Depreciation System. Required for actually deals with the straight line only, required for certain properties like listed properties with less than 50% business use or tax exempt properties. Conventions. Half-year conventions default for most personal property. Mid-quarter convention required if less than 40% of personal property is placed in service in the last quarter. Mid-month convention required for real properties. Section 179 tax deduction. It allows immediate deduction of the qualifying properties up to the annual limits. Key rules. Dollar limit is $1,290,000 and the phase out begins with $3,220,000 of a qualifying purchases and cannot exceed taxable business income. Bonus depreciation, section 168K, applies to new or used qualifying property with less than and equal to 20 years life. 100% bonus restored for properties placed in service after January 19, 2025 and taken after section 179. Real property depreciation. Residential rental, 27.5 years property with straight line method. Commercial property, 39 years with straight line method. And you cannot depreciate land. Here is an example of depreciation. A $500,000 rental with $100,000 land value, depreciation basis will be $400,000 because we need to exclude the land value. Annual depreciation is equal to $400,000 divided by the 27.5. Useful life of the property is equal to $14,545 per year. Depreciation recapture. When depreciable property is sold, prior depreciation is recaptured. Section 1245, personal property, ordinary income up to the depreciation taken. Section 1250, real property, unrecaptured. Section 1250, gain tax up to 25%. Cost segregation. Cost segregation reclassified building components into shorter life property like 5, 7, 15 years, enabling accelerated depreciation and bonus stacking. Missed depreciation fix. The taxpayer can file Form 3115 to correct missed depreciation using Section 481A adjustments. Here is the summary table that can summarize the whole discussion of the depreciation. Recovery period 5, 7, 15, 27.5, 39 years. Makers period. Methods 200% declining balance and 150% declining balance. Straight line makers methods. Conventions half year, mid quarter, mid month makers conventions. Section 179. $1,290,000 is the limit of taxable income cap. Section 179 rules. Bonus depreciation. 100% of post January 19, 2025 properties. Bonus depreciation. Real property. 27.5 versus 39 years properties. Real properties. Recapture. Section 1245 ordinary income. Section 1250 up to 25% depreciation recapture. Thanks for watching and see you next time with another informative video. Till then, bye.